Hi stock investors, JJ here, welcome back. Well, today we're going to look at the internet's favorite Permabull Fundstrat's Tom Lee, who says that he thinks that Russell 2000 small cap index is going to rocket 40% by the end of the summer of small caps. He says, is he going to be right? It's already started. He has had a prediction for this year of 50% rise for the Russell. It hasn't done much in previous years and didn't do much in the first half, but it has had a lift. And let's see what Tom Lee's got to say now.
Next guest does say that this Friday's inflation data will likely shift the odds higher of a July and September rate cut, supporting the summer of small caps, as he said. Joining us here at Post 9 is Tom Lee, Fundstrat Global Advisors, Head of Research, and a CNBC contributor. Tom, it's great to have you.
Great to see you.
You want to start with what the political news or the economic news? What's more important to you, do you think?
In the short term, it's the political news. But really, in the longer term, especially into year end, it's actually the economic news.
I'd agree with that. It's always the economic news that's more important in the long term. Now, I did do a video on my other channel, Stocks a Day with JJ, about the political news. It's been a tumultuous week, hasn't it? A wild week with the assassination attempt on Trump, then the so-called Trump trade after he got a boost in popularity, and then Biden stepping aside, and we're going to have to see who the Democratic candidate is, probably Kamala Harris, but we just don't know. And so the economic news in the long term definitely has a more effect on the market. Which administration is going to affect that more, we just don't know yet. But let's see what Tom Lee has to say about small caps here. What's the bull case?
Explain why.
Well, in the short term, markets are very sensitive to, especially the sector level, depending on whether it's a Republican or Democratic taking the White House in November, and then especially all the congressional elections and state elections. So I think that's what you saw last week, is as probability shifted towards Trump, small caps, industrials, financials rallied.
And you're sticking with that call, which is for what, 40% over 10 weeks?
Yeah, the overlap is small caps are very sensitive to a Fed cut. And really the probability of a Fed cut, that it's finally happening. And I think it's going to look like the October to December 2023 rally, which was almost 30%. This one should be bigger because of the amount of short positioning and the amount of oversold in the Russell. So, yeah. Okay,
so that's a lot in a short time, but the small caps can rocket this much. As I said, they haven't done much. If you look at the Russell 2000 index over previous years, many years, it hasn't kept pace with the S&P 500 or the NASDAQ. Is it time for them to catch up? Is it time to converge? I've made previous videos about this last week, talked about this. Let's see what Tom Lee's got to say. He did say that it's based on interest rates, apart from the political situation. Interest rates, it looks like there's going to be one cut and that's going to affect it. And the small caps did take off after that news. The CPI came in softer, CPI inflation came in softer. The looking to a rate cut, and then that's when small caps, the index took off.
Well, yeah, 40% by the end of the summer.
I just want to dig into it. Does it make sense that tech, that NVIDIA and Tesla and Microsoft and Apple and Meta should be outperforming as the odds rise for a Democratic victory?
Some of that, it's, day-to-day, it could be noise, because last week you had the biggest down week for the NASDAQ in quite a long time, so I think there is a bit of a dead cat bounce. But to me, I agree with you. I don't think that the FANGs are necessarily a Kamala Harris, taking the White House trade.
But there is some evidence of the fading of the Trump trade, as you mentioned. Russell's underperforming, Bitcoin weaker today, financials are lower, so are energy stocks.
Well, again, it's, the sell-off for the Russell started in the middle of last week. It's down almost 5%. It is a mirror image of what happened in October. After that first week rally, you had a 5% decline over 8 trading days, and then you had essentially a 25% rally for 7 weeks without a drawdown. I'm not sure that's any different today.
Is your long-standing optimism about deflation really changing at all? Do you expect any surprises on Friday?
The inflation coming up again, will it come in softer again? And that, they're talking about politics there in terms of who's going to be in the White House, but really I think that interest rates and the economic situation, the macroeconomic situation, which is really impossible to predict consistently over the long term. It's hard to know what will happen there. And the market does think ahead, forward-looking market thinks ahead in reaction to what goes on there. So it will be interesting to see.
One print can be uncertain, but I think the forces underway for inflation to fall like a rock are in place. I mean, the reality is there's a durables recession. It's in
He said that before. He thinks inflation is going to fall like a rock.
housing, and now it's in autos. That's like 60% of the CPI basket is in a decline until the Fed really injects confidence by cutting. And so I think there is urgency for Fed cuts to happen sooner. But at the same time, I think the effect on inflation is there isn't another incremental driver for new inflation. So inflation, I think, is going to surprise to the downside, and hopefully it's Friday.
Energy, same story. I know we've got...
Okay, they talk about energy there. Inflation was the big story there. This Friday will be fascinating to see what happens and what does happen after that. Okay, next we're going to go onto this bull case for small caps, continuing this with the small caps based on what Tom Lee said there and other people that have got a bull case for small caps based on inflation and interest rates and other things too. But first, I'm proud to let you know that I have partnered as an affiliate with ShareSite to give my viewers a special offer for this portfolio and tracking tool that I use and highly recommend. So if you don't know what it is, I'll show you what it is. Here we go. There's a pre-recorded video. We'll just get into it for a minute and then we'll get back to small caps. ShareSite is an excellent portfolio tracking and reporting tool that takes the hassle out of managing your investments. Here's how it works. Simply import your trading history either from your broker or from a spreadsheet or manually. ShareSite organizes all your investments in one place, no matter where your assets live, so that you can track your true and total performance, including dividends, market prices, currency movements, and corporate actions such as dividends and share splits are automatically recorded going back up to 20 years and ongoing. To keep your portfolio up to date, you simply email your trade confirmations to ShareSite, or better yet, like I do, get your broker to do it, because ShareSite automatically updates your portfolio with the trades from your broker, so there's zero data entry required. ShareSite gives you an excellent view of your portfolio with capital gains, dividends, and currency fluctuations. It's easy to compare individual investments, identify any underperformers, and get a complete and accurate picture of your total returns. And ShareSite's detailed tax reports make your accountant's job really easy, saving you hundreds and even thousands of dollars in fees. You can access ShareSite from anywhere. Your data is protected by bank level security and always backed up and secure. You can get started today now by using my referral link. So it's a great platform, and I'm going to put a link to that referral link in the description and the pinned comment for the special offer, so go and check that out. Now let's get back to the bull case for small caps here. Let's see what they say about this here.
Bouncing back today after we saw that big rotation into value. And one of my next guests says last week moves were typical for the start of a new bull market and sees small cap outperformance ahead. Joining me now is Nancy Pryles, Senior Portfolio Manager at Essex Investment Management. And Brian Levitt is here with me. He's Global Market Strategist at Invesco. Welcome to both of you. Nancy, I think that's you talking the happy talk about small caps in the market. Is that right? Some people think now it's over. It's over, but you're sticking with it.
Some people do think that it's short-lived, that was it. They had 10% and then the pullback was it for small caps. Others think it's going to be sustained.
Absolutely not. I mean, remember, we are coming off one of the most dramatic small cap underperformance cycles that we've had. In fact, it's the second worst period of underperformance since 1926, one of the largest in relative underperformance. This rubber band was stretched incredibly tight with the move into mega caps and away from small caps. So even though the moves have been very dramatic, and we would not be surprised to see it pause a little bit here, we think that the combination of under ownership, low valuations, and better earnings growth coming will lead to what could be a very, very robust small cap cycle.
Brian?
I like the comment on the pause, and here's why. So we look at our tactical.
So maybe he's going to take the other position here. There is a bit of a pause, but it was a record jump there to start off. If this indeed is a bull market starting for the small caps, and it's been a long time if you look at the indices, as I said.
indicators, which is rolling over a bit. Growth is clearly slowing globally, led by some slowdown in the U.S. So that's typically not a prime spot for small caps. Now, the market got a little ahead of itself with expectations for rate cuts, so you get a small cap pop, which was great. In the near term, I would say I agree. It's more of a quality mega cap type of world as the U.S. economy moderates. But we have to remember we're peak inflation, peak rates, peak tightening. We will see the yield curve normalize. And over the next few years, I agree, small caps should do well in that type of an environment.
I feel like you're stretching to agree. I feel like you really disagree.
No, I'm not sure.
Yeah, it does seem that way. He's not really agreeing. He said it's still a mega cap world. The multiples of those have run up. So it's going to be interesting to see. If you look at the indices, the NASDAQ and the S&P 500 have gone up, and the Russell 2000 and the S&P 600, which is a small cap index, have kind of diverged away from each other. Will it level up? Will they get more, will there be some catch up here? One goes down, one goes up, or small caps go up to meet it? That's another situation we just don't know. It's hard to predict.
I'm stretching to agree because I really do believe the normalization of the yield. Because small caps need a catalyst. Value needs a catalyst. And so right now, you're not going to see growth go to a new level. Right? And so that catalyst doesn't exist. Instead, what you need is we need to come through the economic soft patch and then be convinced that the Fed can normalize the yield curve without a recession.
So in other words, the reacceleration after
that
slowdown. Nancy, what do you think?
Well, I agree that we need a catalyst. We think we've had that catalyst with the most recent inflation print, that was, if you'll use the analogy with inertia and a body in motion, staying in motion, that was the change in force that caused the shift in where the market is going.
That did seem to be it did seem to be the case where the CPI inflation came in, and as we said, that the next one's coming up. So if it comes in softer, that was the catalyst with inflation, and then the interest rates possibly coming down, or the market seeing that that's going to happen soon. That was the catalyst. So is it a broadening of the market, perhaps including small caps that we haven't seen for a long time? It's going to be fascinating to see if that's the case. It's not investment advice. I'm not suggesting trading on this at all, or buying or selling. You have to do your own work on that and seek financial advice. It's just for entertainment purposes, and this kind of thing is entertainment and general education as well. Right, so right now I'm going to put a link on the screen to what YouTube thinks that you should watch next, and also a subscribe link. If you're not subscribed yet, do that. And thanks to everybody for watching, and I'll see you in the next one.